Morning class 12th accountancy accounting ratio. The topic is in progress is in activity turnover ratio. In activity turnover ratio we have done inventory turnover ratio, trade receivable turnover ratio. Now today we are doing trade payable turnover ratio and average payment period. These two formula only I will explain the formulas. Numericals you will do yourself. It is just ditto copy of average trade receivable turnover ratio. Same like trade payable turnover ratio, net credit purchase upon average trade payable. Average trade payable, not payment, sorry, average trade payable. Average trade payable. This formula tells us that in how many times in a year we are able to pay money to our creditors and bills payable. ये फार्मूला में ये बताता है कि साल में कितनी बार हम अपने क्रेडिटर्स को और बीपी को पैसा दे देते हैं. नेट क्रेडिट परचेज, वी आर गोइंग टू टेक क्रेडिट परचेज ओनली. एंड व्हाट इज द मीनिंग ऑफ एवरेज ट्रेड पेबल? ओपनिंग trade payable plus closing trade payable divided by 2. What do we include in trade payable? In trade payable we include creditors and bills payable. Creditors and bills payable. Now the next formula related to it only, average payment period. What is the meaning of average payment period? It means in how many days we make payment to our creditors and BP. This formula tells us that how many times in a year, and this formula tells us that in how many months or in how many days we are paying money to our creditors and BP. The formula is number of days in a year. If some is asking answer in a month, so we will take number of months in a year. If some is asking in weeks, number of weeks in a year. It depends what the question is asking. If we want to calculate in days, so it will be number of days in a year divided by trade payable turnover ratio. Trade payable turnover ratio. So this will tell us in how many days we are paying money to our creditors. So numerical for these two topics you are going to do yourself. I will not solve it on the board. Now the last ratio under activity turnover ratio is working capital turnover ratio. The formula is net revenue from operation divided by working capital. You know very well working capital is equal to current assets minus current liabilities, right? Sometime in some you are unable to find a net revenue from operation. In that case, cost revenue from operation can be taken. Cost of revenue from operation according to situation. Now in inventory turnover ratio we are going to solve one sum only. We have given trade receivable turnover ratio 5 times, current liabilities 5,000, average debtor 1,80,000, working capital turnover ratio 8 times, cash revenue from operation 25% of total revenue, GP is 33 integers 1/3, or you can write it 1/3. It is not mentioned this percentage on what, so it is always taken on revenue, 1/3 of revenue, or 33 integers 1/3 of revenue. So let us apply this formula. Trade receivable turnover ratio is equal to net credit revenue, which is not given to us, divided by average trade receivable. Here we have given average debtors, so divide by 1,80,000. Cross multiply my dear friends. So net credit revenue is equal to, it comes 36,000 rupees net credit revenue. No, sorry, not 36,000. It is 9 lakh rupees. 18 5s are 9 lakh, right? So net credit revenue has come to us. Now we are given information related to cash revenue also. Let us write total revenue is equal to cash revenue plus credit revenue. Cash revenue plus credit revenue. Credit revenue is given to us 9 lakh. And what about cash revenue? 25%. 25% of total revenue. Total revenue is not given over here. Let us assume it X. So 25% of X. So it will be x by 4, 25 into x upon 100, x by 4 will come this side. So it will be, my dear, 3x upon 4 is equal to 9 lakh. X is equal to 9 lakh into 4 upon 3. So it comes, my dear, 12 lakh rupees. So what is your total revenue? Total revenue is 12 lakh rupees. Now one answer has come. Revenue from operation, total revenue is 12 lakh rupees. Now let us find cost of revenue. How to find out? Apply the formula, my dear. Cost of revenue is equal to revenue from operation minus gross profit. So revenue from operation is given 12 lakh and gross profit is 1/3 of revenue. It comes 4 lakh. So cost of revenue is 8 lakh rupees. Cost of revenue is 8 lakh rupees. Another answer has also come. I think you understood. Now some is asking for working capital. For working capital, let us use this formula. Working capital turnover ratio. 8 is equal to total revenue is given to us. Sorry, net revenue is given to us 12 lakh. Divide by working capital. Cross multiplication. So working capital is equal to 1,50,000. Working capital is 1,50,000 rupees. Now some is asking for current assets. You have given current liabilities also. By using 5,000 current liability, working capital can be or current assets can be calculated easily. So this was your topic, my dear friends, which is known as in activity turnover ratio. In activity turnover ratio, we computed seven formulas. 2 plus 2 4, 7 formulas. First formula was inventory turnover ratio. Second was averages of inventory. Third was trade receivable turnover ratio. Fourth was debt collection period or average collection period. Fifth is trade receivable turnover ratio. Next is average payment period, and the last one is working capital turnover ratio. Now one type left in this chapter. The name of the topic is profitability turnover ratio. Thank you very much for today.